point of sale software provider and also a payments platform operator, Lightspeed, reported revenue growth of 18% for fiscal 2025. It topped $1 billion for the first time, continuing to focus on strategic growth, but also revamping its sales process. Let's get more from Dax Dasilva, founder and CEO of Lightspeed. Dax, great to see you. Thanks very much indeed for joining us.
Thanks for having me.
Give us, what was the top thing in the quarter? What do you think investors should bear in mind, one or two things about this quarter?
Yeah, well, as you mentioned, we're really thrilled about crossing that $1 billion revenue mark in F25, and also delivering profitable growth. I mean, that's since I came back as the CEO a year ago. We're talking about increased profitability, so delivering 54 million in EBITDA, up from about $1 million in the previous fiscal year. That's significant, and of course, we're guiding to over 70 million in EBITDA for this fiscal year 26. Q4 was a transitional quarter. We spoke about our new growth strategy in our two core growth markets. Capital Markets Day was in March, and so Q4 was really ramping outbound sales reps in our two growth markets, and cutting back some of the aggressive spend in the rest of world markets, our efficiency markets, where the ROI is less from a new business perspective. So some transition there, but we also had 10% growth, and we're able to increase software ARPU by upselling and cross-selling existing customers.
So your core businesses are North American retail, and also then hospitality, hotels, restaurants in Europe, Middle East, and Asia.
That's right. Yeah, these are our two areas where we have the highest right to win, the best competitive position. We started in retail in North America with the product that I built over 20 years ago. Lightspeed just celebrated 20 years, and in our hospitality market in Europe, we started that business over 10 years ago. So we're very well established. If you want to, modernize a restaurant chain that's pan-European in Europe, Lightspeed is the cloud-based solution. Similarly, if you're in a complex retail vertical in North America, let's say sport and outdoors or multi-brand apparel, Lightspeed is the go-to solution for those complex retailers. We connect with, we are very good at inventory management, and we're also really good at connecting you with the key brands in your vertical. So we do that more complex merchant, and so we are in essentially a light ERP for this customer.
So what was that last thing, light year?
A light ERP. So we're sort of the central nervous system, chief operating system of these businesses. They're still SMBs, but they're not quite the scale of enterprise.
Right. One of the worries, I think, about the stock, ATB, for example, cut you to hold there a few weeks ago, is that you're quite exposed to smaller businesses. That's a hangover in this macro environment, in this potentially weaker economy. People see smaller businesses at risk.
Yeah, in the SMB segment, we work with the more established end of the SMB market. So those merchants that are doing 500K of GTV and above, we did see softness, some pressure in the macro in February and March, stabilized in April, and we're not seeing further deterioration. In times of economic uncertainty, we feel that Lightspeed is a great lever for businesses to be able to double down on technology, to be able to find efficiency, to be able to find growth vectors where there is more uncertainty. And in the case of Lightspeed, especially in our retail platform, to find new sources of supply if there are tariffs or trade considerations. Our new order platform lets retailers browse and order from suppliers in new areas and discover new sources of supply. So we can be a real asset in times of economic uncertainty. Certainly, Lightspeed really thrived during the pandemic, helping businesses modernize and become omni-channel. And in this current context, we can really help businesses become more efficient and also find new sources of supply.
Looks like investors still skeptical. The stock down 29% this year, Dax. Why is that? Why aren't people buying into your story right now?
I think for many years, Lightspeed, was growing on the top line right now, we're very, very focused on profitable growth. That means focusing on gross profit and adjusted EBITDA and free cash flow. And so that shift in terms of really doubling down in our areas of right to win, our two growth markets, and going, investing in product, investing in outbound sales. These are some new motions that I think that are going to build, they're going to help us deliver on that profitable growth strategy and how shift the financial profile of the company over the next 3 years. We've shown a 3-year trajectory of Lightspeed where, we're showing a CAGR, us growing gross profit by a CAGR of 15 to 18% and adjusted EBITDA by 35%. But, we have a lot of pieces that are being ramped right now. In that strategy, for example, the 150 outbound reps, where we've hired half, but they'll take 6 months to ramp up. These are the best strategies for the company. I think everybody accepts and is excited about that. But it will take time to ramp the strategy.
Yeah, talk to us about that, because you are hiring people who actually use up shoe leather. They actually walk around stores and restaurants.
Yes.
Am I being naive here? Your sales force?
Right. So we've ramped field reps in Europe. So those folks will go door to door at established restaurants in the big cities in Europe, in key cities. So this has been a massive effort during Q4 for us to do that. It's actually going very well. We had our record month for outbound in March. So we're quite excited about what we're seeing. And on the retail side, we have remote reps, in office calling out to retail businesses in our key verticals. Lightspeed's been primarily inbound sales focused over the last, more than a decade. So this is a new motion for us, but it's one that we've been working with for the last year. But now we're doing it at scale, more than tripling the outbound force. And for us to find that ideal customer profile, that business at scale, this is the most efficient way to do it. It's just going to require a little bit of a ramp of the reps, but it's going extremely well.
I know you were considering selling the company. Nothing materialized that you thought was fair for shareholders. What about acquisitions? You have done a whole bunch of acquisitions in the past. Are you kind of holding off on that for now?
Yeah, we're not considering any large M&A. We're always on the lookout for small tuck-ins that can help us build up software revenue and build software ARPU. So always on the lookout for those kinds of opportunities, but large M&A is off the table.
And Dax, we've only 30 seconds. I'm one of these impatient people who does not like waiting at the checkout. I don't think I'm unique. Does your tech help speed things up? I hate waiting to pay.
Yeah, it wouldn't be called Lightspeed if we didn't make checkout, a very, very efficient and fast process.
And I should, the person manning that cash register, it's a tough job. I'm not blaming them. Thank you very much indeed.
Thanks so much.
Dax. Dax Dasilva, founder and CEO of Lightspeed.